Here is a look at the North American markets, which are in the green. There was some tariff talk out of Washington this week, but nothing concrete has been shared so far today. We know that can change at any moment. Let's bring in Kyle Taylor about the climate we're in right now. He's a first-time guest, wealth advisor and portfolio manager at TriDelta Private Wealth. Thanks for coming in, Kyle.
Thank you.
Okay, the Trump factor, is that pretty much what's driving investors away from the American dollar?
Yeah, the tariff component is certainly a big one for investors today. One of the big risks that we're watching with the clients that we're working with is not to let it pull them away from their long-term financial objectives. We certainly are putting emphasis on being highly active and believe that a bottom-up analysis to stock picking today should have a premium because we're not letting ourselves fall in love with any given sector or even geography, because the tariff impact really needs to be analyzed on a company by company level rather than generally.
And even that's hard to do when they change sort of day to day, sector to sector.
Yeah, and that's why I say it's important to keep your long-term goals in perspective, because we believe that patience will be rewarded for investors today. And again, just not to let it pull them away from their long-term goals.
Okay, so what currencies are actually benefiting from the pull away from the American dollar?
Well, I think everybody's watching the Canadian dollar today just because, especially with the election coming up. But for us, it's about having a diversified portfolio to make sure that, for what can't be predicted, can be baked in for a diversified portfolio.
Okay, so you are again looking for a longer term. Are there other currencies besides the Canadian that are getting some strength from this?
Certainly. I mean, everybody's watching the U.S. dollar, and certainly on Monday we thought we were holding our breath given the challenges to the Fed independence and Trump's rhetoric in that respect. And really, that's a big concern for investors today because the Fed independence is something that's viewed as paramount for investors and for the global banking system.
Can you explain that a little bit more as we get deeper into this, why that independence and the division between sort of politics and policy is so important?
Well, I think it adds a check to the fiscal authority, not just in the U.S., but globally when you're looking at central banking. And knowing that the global system and other countries can rely on the independence of the Fed, regardless of who's in the White House, is something that can add a lot of confidence to an already shaken market.
Do you think there's long-term damage being done to that? I mean, Donald Trump has backed off and said, I'm not going to fire Powell, but he hasn't said, I'm not going to interfere. Yeah. So I'm just wondering if you see a longer-term fallout from what has happened so far.
I think it's tough to answer because, in my view, if there was a challenge to Powell, then there's other committee members at the Fed who would, I think, want to reinforce their independence from the fiscal side of things. It's tough to diagnose. It's not something that I see happening, but I think it is something that markets need to appreciate.
Okay. You talked about the Canadian dollar being under-owned, I guess. Tell me a little bit about how that works for you.
Well, I think the bottom line for us is that we're finding Canadian opportunities regardless of the currency. I think that, again, you have to go company by company, and not all companies are being impacted by tariffs the same. One company in particular, Extendicare, which I've done a lot of research on and we own in our portfolios, is a health services company solely based in Canada. They're largest owner-operator of long-term care homes in Canada. And they benefit from being solely in Canada. They benefit from many of their suppliers being Canadian. And the fact that people are getting older and relying on those services isn't changing because of tariffs. And I think that's a good example of why it's important to do a deeper dive under the hood to companies to find where the value is.
Are you finding many of them? We're so interconnected, and in some way or another linked either for input costs or for sales. I'm sure it must be a little hard to find the companies that stand alone that way.
Well, I'll give you another one. I think the automotive sector is one that's being in focus for Canadians, given the interconnectivity of the U.S., Canada, and Mexico. And another name that we like in the U.S. on the NYSE is Axalta Coating Systems. And effectively what they do is they are an industry leader in high-performance paints. So a lot of their customers are in the automotive sector and in industrial manufacturing. We actually really like them because if you are in the camp that manufacturing is going to move to the U.S., then they can stand to benefit from that transition. But they have customers in over 130 different countries. Only 10% of their raw materials comes from China. Very little reliance on Canada and in Mexico in that respect for production. And what we've seen from a lot of quarterly earnings reports is that demand is being pulled forward early on in the quarter as companies look to beat tariffs, and that was something that benefited Axalta. What does that mean for Axalta and a lot of other companies? Is likely there's going to be more modest demand Q2, Q3, even if the tariff situation resolves itself.
Yeah, people have bought up, stocked up their inventory, and don't need to look again.
We saw Apple flying in tons of iPhones to beat the tariffs for that very reason.
Okay, so let's talk a bit more about the Canadian dollar, because it started the month under 70 cents. Yeah. Then everybody was happy, got over 70 cents, and now it's hovering about 72 cents US. Do you see more strength for the dollar in the coming months?
I think you'd have to ask me after Monday's election.
Okay.
I think.
Explain that.
Well, I think some of it will have to do with the party in power, and we've already seen the fiscal platforms that have come out from the individual candidates, the leading candidates, and the Conservatives and the Liberals. And I think what people want to see is more fiscal responsibility and less debts.
Okay. Very quickly, you mentioned extended care. You mentioned Axalta. Do you have another pick you want to share?
There was Aritzia. Aritzia is a strong buy in our opinion. We have a price target for it at $74. We like it. It's a well-known brand in Canada. I mean, I get a lot of packages to my door just for my household, so I would buy it just because of that. But we think they're a great Canadian growth story. We think that they're relatively cheap, trading at about a 17 times forward earnings today. And they've been hit hard, like a lot of retailers have. But if you look under the hood, especially for retailers, they only source about 35% of their product from China. That's expected to come down to 25% in the next year. About 65% of their US e-commerce sales are fulfilled in Canada, so they're bypassing China and some of the other Asian countries more heavier hit by tariffs. And there is levers that they can pull to mitigate the impact of tariffs in terms of pricing, supplier power, and we just think it's an attractive value right now.
Yeah, a lot of people are liking Aritzia, and it's also just a very popular brand and seems to be keeping that status.
It is, yeah. It's certainly living up to the luxury brand, I guess.
Got it. All right, Kyle, I appreciate you coming in. Kyle Taylor is the Wealth Advisor, Portfolio Manager at TriDelta Private Wealth. After